could also see this as your Judas swing, right? So you look at the 5 minute. Judas swing up. Did sweep out liquidity. That's the only thing that, we could return up to the London session high. But we are filling the fair value gap. Bullish closure on the fair value gap there. Let's check on YM. Same exact thing, but a little bit more bearish. Yes, definitely more bearish. You can see we're basically only filled 25% of it. I might want to reverse now. So, and filled the 5 points that I was talking about earlier. So that's why I wasn't favoring any longs from here. If we went long in here with the order block, that'd be fine. But this gap, no. But nice breakaway gap formed after we started the expansion leg. And you can see the original consolidation in here. Could use that as a sell side draw. Let's look at now. Yes, we do have a dealing range in here. So if you were to look at the 1 minute, the high point, I guess you could also use this high point to low point. Now, whenever you have a reversal, you're going to be targeting the opposite side of the liquidity. So technically, this down here is what you would target. The only problem is we did actually no. We should expand down to here. I feel like this is a solid draw, and you can see starting to expand lower with the 10 a.m. news. So retracement, stage of delivery prior to 950 macro becomes low probability. I want to see the swing low now as the target. So now you could use these inversion for value gaps, order block. Might get some respect of the order block if we close below. So now this old selling, once we close below this old selling, you'll see speed. So watch this order block in here. The low end of this order block, okay? If we form a candle, if we close up above it, that's fine. But as soon as we put a candle body below, you'll see maybe an IO fed quickly, and then you can see just a quick expansion after we close below the old selling. It's also liquidity down here, but this is my target right now. Okay. So you could use the inversion for value gap in here as your entry point. And then you'd be targeting the 20 points, obviously, you could use from the inversion. So if you want, you could use wait for the. I don't think this fair value gap will fill, to be honest. But take profit all the way to low. And if you wanted a large stop loss, you could put it all the way up there. I don't think we'll fill that, to be honest. But that's what I'm looking for. Let me move this to the right. I don't like how this. There we go. So I'm gonna get a fill of that. Preferably this is mostly left open. So this gap in here mostly left open. You can see the nice expansion lower. About to get 20 points from there. So look for the 20 points from here. Smash through the 20. We're already at 400. Now then look for New York AM low. I'm still looking for 14,847 as the take profit. Could take also one off from the 932 swing low. That's also fine. So if we pop lower one more time, we'll take one off. There we go. Still looking for a nice closure. So you can see we also closed below the old selling in here, right? So preferably you don't see a candle body that's placed back above this order block. Here comes the sell side. Can move stop to break even. Now you could also look for external range, the sell side, which would be all the way down there, which I think is very possible. But we'll just be safe here and just take it at the external range liquidity down there. Now, another thing, let's just wait for this to get filled, and then I'll go in my spiel. So I'm moving stop 2, there's a gap in here. Let me move some of this clutter. This gap in here I want to see mostly. Left unfilled as well, breakaway gap. Close below the old selling, breakaway gap. Makes sense. So wait for this to fill out, and then I'll talk about external range expansion. What did I say about the retracement stage, right? You wait for after 10 a.m. You wait for that stage of delivery, and then use that as your entry point. And here comes the sell side. One last push. It's teasing us, just wicked right past it. There you go. So there's the fill. Sell side liquidity, bagged and tagged. We'll look at the execution labels really quick. Pretty standard stuff, if you ask me. I'll post that in futures trades. Sell side liquidity, there you go. 14,811. I'm still looking for 14,811. So watch the swing low down here. Okay. So nice entry off the order block, inversion order block in here. So this becomes a selling order block. And look at the respect of those candles there. So we close below the old selling. So this is a market maker sell model technically. Very rough, but market maker sell model. Close below the old selling in here. Close right at it. Close right at it again. That's where I entered. Close below. Did not ever return back to this order block. Close below it here. Look at the old selling from here. Order block. Came up, wicked into it. You could use that as a selling point. But then look where we left above the order block, a breakaway gap. So if anything, you would see an IO fed into here. But no candle buys placed above the order block again. Old selling in here. Old selling in here. Right? So if you want to take this out, close below with this candle, no closure above, swept into sell side. So once you start seeing these elements of price, it becomes very, very clean of what price is supposed to do, right? It's just on a script. You just learn what it's gonna do on the script, and you can just take as many trades as you want, to be honest. But that was gorgeous. I agree. But okay, to the spiel. So still look for the sell side down here. I'm completely out of the position. I also took it on the other screen if you want to see that. I just took it at like 30, 35 points. I took it off and then let it run on this one. I accidentally entered another contract, but I'll just screenshot it and send it anyways. So same trade, just on two different screens. So whenever you have, now you might want to write this down. This is what I was trying to study yesterday. But whenever you have a parent dealing range, okay, and you retrace into that dealing range, and it sweeps a lower time frame or subsequent dealing ranges high or low. So to put that in easier words, basically when you have a dealing range and you return into 50% of that dealing range, and at the same time on the lower time frame there's a buy side or sell side liquidity pool, so an internal range liquidity pool, you'll see external range expansion. Okay, so external range expansion, I would expect that this sell side liquidity down here is hit. We also have a reversal condition at 10 a.m. So you would see 1030 as a continuation. Anyways, so to make that simpler, if we look at this parent dealing region here, I'm glued to price. I want to see it run down. Okay, you know it's going to run down. It's there. Anyways, high, or you could use this high if you want, to low. Okay, that's your dealing range prior to the equities open. If you want to use the London high, that's fine too. Okay, if we go to the 3-minute, high to low, right? We retrace into premium. So a dealing range retracement on the parent dealing range. So the parent dealing range is this larger one, okay? Subsequent dealing ranges, if you drop into the 1-minute, there's a tiny dealing range in here, tiny dealing range, things like that, okay? Parent dealing range retracement, meaning back into premium and into a fair value gap with a lower time frame run on liquidity. So that's your parent dealing range retracement, lower time frame run on liquidity. What do you have? Buy side liquidity here, buy side liquidity here. Ran it out, reversal. We close back below here, and then you expand to a external range liquidity. So you won't just expand into here. It's not going to happen. Okay. If you see an external or like a larger parent dealing range and we trace into it, and you swept out liquidity, you're always going to go further than wherever that swing low was. You always will. Now, don't take my word for it. You can go and backtest all these things, right? But from what I've seen for the past 2 days or 3 days of hours of backtesting, that's always what you'll see is if you retrace on a higher time frame and then sweep out liquidity on the lower time frame, you'll expand past the lower time frame target. So you're not always like in this situation, you're not going to just take profit here. I mean, you could. There's nothing wrong with that. Obviously, there's nothing wrong with taking profit here. It's still 30 points. Like that's plenty of money. But you always will expect an expansion down into here. Now you could also see this as your reversal condition. What does reversal condition state is once you confirm the reversal, you're not going to time the reversal, obviously. But once you can confirm the reversal, it's always going to target the opposite side of the dealing range. So in this case, you have your low to high, or low to high. Or no, high to low, sorry. High to low. Right? Swept out the high. Swept out the high. Reversed. Close back below. Where do you expect price to go now? To the low of the dealing range. Expansion quickly. Okay. So that's also why I'm fine with entering here. I know we had this large candle, but I'm expecting a run down into the sell side. So I'm fine with entering all the way up here. We're still, I think we might still be above. I got in slightly late. This return right into here would be perfect. Tap into the inversion for value gap and run premium of this dealing range. That would have been a perfect entry if I got it right there. I was a little slow to the draw, but you can see it's still decently around 50%, and you're expecting an expansion lower. So all those things in mind, I hope that made sense. I know it's kind of confusing, but when you have those things in mind and you apply time and price and the stage of delivery, it becomes very easy. It's all the same exact stuff, right? You can see it in here. Consolidation, expansion. Now expansion has two options. You have either retracement or reversal. We reverse and expand lower. Okay. Now I'm expecting either we just retraced back into probably a 2-minute fair value gap, 3-minute fair value gap right in there. Remove this stuff. 3-minute fair value gap right in here. So after retracement, we either see consolidation or we'll see another expansion leg down into the sell side. It looks like we're expanding lower. And obviously once we close below here, you'll see all of those, probably some speed below there. Let's look at the dollar. Yeah, so dollar dumping off, what does that indicate? Dollar and indices dumping off. Thank you, Demnex, pointed that out. This indicates low probability, right? Whenever you have, exactly. So whenever you have DXY and indices both doing the same thing, so low probability condition. And so you can see here, New York, what is this? lunch from yesterday on YM was swept out, so that's a large pool of liquidity. NASDAQ, we fell, what is this? It's 8 points short, kind of sad. And ES, we swept out the liquidity down here as well as the external range liquidity. Now you can see on ES the same thing, right? We're tracing to parent dealing range discount, or premium, I mean. Parent dealing range premium, swept out liquidity. External range displacement. Okay, so I'm not entirely sure if we'll now get down to this low. I would like to see that low swept, but it's also very possible we just retrace back into this breakaway gap in here now. So this breakaway served its purpose. So look at this now as a sibi. Now you just want to see breakaways fill or be left unfilled until your drawn liquidity is hit, if that makes sense. So until your drawn liquidity is hit, you want to see those breakaways be used as breakaways, and you know, all of the same rules apply. So once we see the closure below this order block, you don't want to see a return. Same thing with here. Once you get to the drawn liquidity, now whether it be this one or this one, I'm not entirely sure. I'm still favoring 811, which see if we can get the speed now. But yeah, once you pass those lines and you hit drawn liquidity, price can do whatever it wants, right? So you're either going to wait for consolidation, or we did leave a lot of gaps up in here, so I'm expecting some sort of retracement up into there. And here comes 4811, 14811. There you go. So screenshot this, add it to the charts. I'll put it up in predictions as well. I got a better screenshot right there. So 14811. There's your overall sell side liquidity draw. Right there. So there's your external range expansion, right? External range would be all the way back here. Make sense? I can take this off now. Now you have two options. You can either just be done for the day, because I feel like that's a solid, what, 50-point run, 100-point run if I held it. Still 50-point run down the sell side, but good 90, 100 points down there. Plenty of movement, especially if you got in and got out. I would say just be done for the day. Or you could wait for the 10:30 to 10:45 macro. Yeah, I'm not going to take any more demo trades. I'm going to be done for the day. I think that was a solid learning experience. But yeah, exactly. Yeah, that's why he said he always gives back. I feel like if you can make one good trade, the first trade, if it's solid and you're content with it, don't even think about taking a second trade. I mean, if you want to, I would say lower your risk. So if you're using 6 contracts on your first trade and you have a nice, 50-point trade like this, just drop it down to 3. So that way, even if you lose, you're still green and you can walk away green. I would never say if you get a solid trade, use the same leverage. I mean, if that's your risk profile, that's up to you, but I think that's the emotionally smart thing to do, if that makes sense. We're talking about, oh yeah, okay, so 10 a.m. reversal point. Now this is slightly before 10 a.m., but we'll just use the news driver as just the idea of reversing at 10 a.m. So typically you'll see one of two things happen. Let me go to my notes. Wrong page. So typically you'll see one of two things happen, or one of three things, I guess. You see a 10 a.m. reversal, a 10:30 reversal, both. Typically you won't ever see none. Yeah, you'll either see a 10 a.m. reversal or a 10:30 reversal. Now that reversal can just be, doesn't have to be far, doesn't have to be the entire high or low of the day. So this could just be the high of the day that we see. But just a reversal to the opposite end of the dealing range. Okay, so this constitutes a reversal because we just returned back into the sell side. I want to find an example where you probably could go back to the screenshots that are posted in macro review and in the predictions chat. But when you sometimes have an expansion leg, and then so just imagine with me, we didn't have news today, and we had this consolidation in here, an expansion. So you're going to use the retracement entry or the expansion entry. So you look for this for value gap, or look for it to dip into there, go long, right? and we're going to target buy side. So if we saw that, so if we saw a retracement or an expansion entry given at 10 a.m. and we continued to the upside, so into there and then we continued up. There's a sell side liquidity pool right here, obviously from 947, so that swing low. There's a swing low down there. At 10:30, typically you'll see some sort of reversal back into the range, back into 50% of the dealing range, or back into sell side, depending on what we do. Now, if you have a reversal at 10 a.m. And we have an untapped drawn liquidity, which we did just tap into the drawn liquidity, so I'm not expecting much from the 10:30 macro. But if this drawn liquidity was further and we still were reversing from 10 a.m., you'll see the 10:30 basically do something like this, where you have a retracement back into a fair value gap like this, and then return lower. Makes sense? Now, another condition would just be the consolidation you see after the 10:10, the macro here, right? So we always wait. Preferably, you want to wait for after 10:10 for your silver bullet. I don't really like trading silver bullet anymore unless I can distinctly see the stage of delivery we're in on the 5-minute. But sometimes you'll see those days where we start to consolidate after 10 o'clock. Now, this is probably an example we might want to consolidate around here, especially since we did sweep out liquidity. Might want to consolidate or retrace into these for value gaps. I'm watching that. And then whenever you see consolidation, expansion is your only choice out of consolidation. So you can use the 10:30 to 10:45 macro as your expansion entry. Outside of that consolidation, you sometimes get between this 20-minute interval in here. Okay, so it's all just applying time, price, and state of delivery. And then the easiest way would just be, where have we been? What stage have we been in? Where is price likely to draw towards? So that's your draw on liquidity. And what stage are we in now? Okay. So we were in a retracement stage. We hit a reversal. So that's the stage we were in. Draw on liquidity was lower. And you use that to go short. This works. You can go back and look at all the back testing. This stuff works. Yeah, it's not just a macro. Exactly. I think the lesson helped me understand it's not just a macro. Exactly. Yeah, so the macro is one of those things where you'll see a specific stage, or you'll see, it's just a 20-minute window where you can see all 4 of the stages of delivery. It can be consolidation. It can be, well, actually, no, you probably won't see consolidation within the macro. You'll see consolidation prior to the macro, but consolidation, expansion, retracement, or reversal. You can see all 4 of those in that specific time window, okay? So you basically have 4 different opportunities to enter. That's kind of why I like it, is because no matter what, assuming you know the draw on liquidity, you can get in, you can get out, despite the low probability days, obviously. Yeah, you can time for an entry, but you also need to know what and where it's planning to go exactly. Now, the thing about other models, so say you have your 2022 or your unicorn model. We'll use 2022. I'm sure everyone's familiar with 2022. That is strictly just a reversal model, right? If you think about it, you're waiting for a sweep of liquidity, which is your first stage of reversal, and then your market structure shift. That's your second stage of reversal. So it's always going to be a reversal entry. So that's the difficult thing for people to understand, is because then you can't always time exactly when it is. You'll have to wait for that reversal to show. Nice thing about the macros, and the nice thing about silver bullet and things like that, is you can basically just apply whatever stage you're in, and then once you understand the stages, then you can use whatever entry you want. But I would say in the beginning, if you're new, or if you're new to ICT concepts, or just new to trading in general, you just want to find one stage of delivery that is nice for you, and then you can clearly see. Okay, so that could be consolidation for you. That could be the reversal point, like 2022 states. It could be a retracement, because you could see okay, there's a gap here, and I'm expecting it to return back into that gap. So you could see, look, there's entry points in here. Tiny for value gap in here, ran into it 916, and then you start climbing upwards. Yeah, exactly. You look for one state of delivery, and then once you perfect that, then you start building all the different models that form onto it. Okay. Now that also comes with time. So I would say first look at an element of time. So focus on a kill zone. That could be the New York kill zone or the PM kill zone or London. I would say if you're new, look at strictly just from 9:30 to 11 o'clock in the morning. Okay. And then pick one of the stages of delivery that you're going to focus on. So it could be reversal. So this is where someone would take a trade, right? Then once you're comfortable, you just basically just start building in, and then all you have to do is look for a specific any one of the 4 stages within that kill zone, and you can take a trade. Trying to see if price can run higher today. That would be incredible. 10:30 marks the low of the day. Yeah, it's a potential. We do have these gaps in here that I'm watching. Look at the 5-minute. We have this huge gap here. So I don't think that this will be left unfilled the entire day. Let's go back to the hourly. So ran into the sell side I was talking about. We also have an order block in here that I'm watching. I guess this would be your order block technically. Let's go to the 4-hour. Yeah. Order block in here. Right. So watch how we respect. We'll probably get some respect off of that. Start bouncing out. Yeah, so watch the gap in here. It's very possible we retrace into there. I'm not sure how high we'll return. I would expect price to come up into 50% of this dealing range here. So assuming this is the low, let me take fib and put it on. So we do have this gap up here. So watch this gap. I want to see filled by the end of AM session potentially. I don't think we'll climb up into the 956 high prior to lunch. I just don't see that as a possibility. Since we did run out buy side, we did fill this gap, and we had the news driver that pushed us lower. So this is high resistance in my opinion. So I don't think we'll reverse and climb all the way up into here going into 11 a.m. I think lunch and PM session is possible since we do have the London high untapped, and we do have kind of like a low resistance sort of market structure here. But I don't know if 10:30 will create a strong reversal, especially with this many gaps that need to be filled. I think it's possible we return up into here. We'll see. We'll have to just see for price. I'm not going to try and enforce my will onto the market, but if anything, I think we would probably consolidate. It wouldn't be a quick run. It would be a lot of consolidation, return back up into here. You can see almost a market structure or market maker buy model in here. We have old buying, old buying. So watch how if we close above there, it's possibly used as support, and then you can use that. We have some gaps in here. Nice speed off of that level as well. But yeah, look at the gaps in here. And then if we start to trade through them, watch for a retracement back into there, and then use that to go long. But you could also just see these respected and we trade lower. ES just swept out their sell side liquidity. So if you look at the ES chart, beautiful market maker sell model on the 1 hour. Let's look at that quickly. Beautiful right in there. Smart reversal after you swept the high. Traded back lower, broke market structure, back into the fair value gap in here. Broke lower again, traded back up into the reclaimed fair value gap. Another fair value gap, boom, back into the sell side down here. Beautiful market structure, or market maker sell model. So I'm not sure if we'll continue or if we just want to bounce off this. Yes, we also have these gaps in here, old buying. Now, consolidation. We're in a consolidation range. So we had reversal, expansion, consolidation. So we're looking for now expansion out of this range. So mark out, depending on where this is, I want to see, look at the 2-minute. We'll stay on the 2-minute here. Now, a good tip is typically whenever you see consolidation, you want to stay on the time frame that the consolidation is in. So yesterday was a good example of why you want to do it. Kind of got chopped up yesterday trying to tape read it, right? All in here. We're trying to tape read all this and got chopped up. Now, on a 1 minute, you can kind of see the displacement leg. Like this looks pretty clean to me. You tap into the fair value gap, I would say, okay, that's a solid short. Probably got stopped out there. But this kind of consolidation, if you drop to the 3, go up to the 3. I sent this yesterday, a picture of it. If you go look at the 3-minute chart, this is just very, very clear consolidation. You don't want to be trading in it. And then as soon as we got displacement out on the 3-minute, what did we do? We came back, tapped into the order block and the fair value gap, and expanded up into the London session high. So whenever you have consolidation like that, it's good to stay on a higher time frame. Now, I wouldn't say look at the 1. I think that's the worst one to look at unless it's like tight consolidation that you can only see on the 1. But if it's clear consolidation like this, I think the 2-minute is fine, 3-minute is also fine. Obviously, when you start getting higher, it becomes a little bit difficult, a little bit harder to see. I think the 2-minute is fine though, right? So it's not as data heavy as this is, because sometimes you can get, as soon as we break the low or the high, you want to get in. But sometimes you can just have expanding consolidation, not expanding it. That's a poor choice of words. You have basically just like a widening, broadening formation. If you're familiar with retail concepts like this, exactly. Broke down to the low. People are going to try and get in there. But I just see that as a Judas swing, a super sell stops. Bet it hits it at 10:30. Yeah. Randomly we get price movement right there. Super the. So if we were to use this as a sweep of liquidity, I would like to see expansion up past here, past the swing high, and then you have an order block in here, these down closing candles. Return back into that order block, go long off of it, target 20 points, swing high up here, etc. So nice sweep of that. But obviously if you look at the 2-minute, it just looks like broadening. So this would be your order block on the 2, 791. Can use that. Go long if there. Obviously we need candle closures bullishly, like strong candles that create fair value gaps preferably. So whenever you have consolidation, there's 2 ways you can wait for consolidation to be over. Is you stay on the time frame, you wait for it to leave it, obviously with a candle body, or if you're on a lower time frame, so like the 1 or the 2, you're gonna wait for fair value gaps, continuous fair value gaps to form, either within the range or slightly leaving the range. I think yesterday was a good example. So if we're in here, I wanted to see at least 2 fair value gaps bullishly, and we close above here. I think yesterday was a good example. On the 3-minute, obviously it was clean, but on the 1-minute, you have some fair value gaps that form, but not continuous ones. So in here, fair value gap, really no fair value gap. This one, really nothing with this one, but instantly closed back, right? So no continuation. Green candle, green candle, green candle. Strong price movement there with the fair value gap with no black candle there. Dipped into it. Obviously we did almost close above here, but we wicked above it. So failure to make a lower low and a pop up above that high. So on the 1-minute, it's very difficult to see. I would just say stay on the 3-minute. See that nice movement here? So consolidation, you're expecting an expansion. So watch how we pop up into there. And then watch the order block if we close above it. So this order block in here. That's what I'm watching. Now you can take the fib high to low. Whoops, this is an order block. How do you confirm a reversal? So it's a good question. You have For me, that's three options. So yeah, market structure shift is one of them. You need a clean market structure shift with displacement. So broken, like this. Right, here's a good example. Swing low. Now, with market structure shifts, you have one of two options. You have the high probability market structure shift and low probability one. The high probability one is if you have an intermediate term low or high. Basically means if the swing low or swing high fills a fair value gap, and then we break that with displacement, so basically closing past the fair value gap that is filling, that's a good indication that price is willing to go in the opposite direction. So one would be the market structure shift. Two would be a formation of a breaker. So if you see a clean breaker formation, I guess you could use this here. Low, high, higher, high. Or no, sorry. High, low, higher, high. There's your breaker formation technically right in here. So you could be buying in the breaker. And then the third one would be just a disrespect of 3 PD arrays. Or if you're really, really confident in the reversal, you could just use a disrespect of 1. Now, I wouldn't suggest that, but if you see a clean, so say if your value gap formed like this. This is what I was watching earlier at 10 a.m., right? We did close below it here, and we had an order block. So this should be a strong duo. Whenever you have an order block and a fair value gap paired up, that should be a strong duo. Tapped and closed almost, yeah, we closed all the way to the discount end here. Closed below it, tapped in the order block again. Closed below, past mean threshold of the order block. That's a, you could, if we wicked into here, into this fair value gap with the BPR technically, you could go short in there. Because you have higher time frame context. Obviously, you're not going to try and predict it without looking at the higher time frame or the parent dealing range. So don't try and like time the reversal, if that makes sense. You want to wait for it. That's just your turtle soup entry. And would you look at that? Closed above, tapped into the order block there. Look for this gap now, as well as the order block low. Look at that beautiful price action. Gorgeous. Sweep the sell side. Here's your expansion model. Tapped into there. Now you're looking for 20 points from the order block high. Now this is a propulsion block. You don't want to see mean threshold the propulsion block hit. Make sense? So there's mean threshold. We are tapping to here, but preferably if you do have a deeper retracement, so something like this, if you had a retracement into the breaker, you want to see mean threshold of the order block hit. But 20 points would be up to basically that point. What is that? 97, 1497, 97. So you look for 14, 817. Roughly right up to there. Yeah. So watch where this candle closes. Should see a bullish closure. That's not what I want to see. So we need to either quickly accelerate upwards. I don't want to see a sweep of this low at all, to be honest. I can remove this sell side liquidity. You can see the consolidation in the gap as well, right? So I was annotated that 1 hour gap on the daily bias post, and we're consolidating within that gap with the liquidity below it, expecting expansion out of consolidation. So look for this. I don't know why this gap is so messed up. It's probably the higher time frame gap, that's why. So I'm looking for the sibi. So this is not what you want to see. You want to see a quick expansion out. We are tapping into, I think, 15 or 50% of the consolidation zone. So that's fine, I guess. Tapped into it. Still got what? 7 minutes left in the macro. The tiny macro there. So you wouldn't want to see a closure below 14,786. This tap is fine. But if you want to remain bullish up into this gap, you don't want to see a closure below. Like that kind of movement there. We're dipping all the way into the order block low. So to need either a strong reaction here, or it would be gotta be very careful for taking longs. So like that's not what you want to see. So this kind of price movement, not preferred. You can see now we're dipping lower. We did tap into the, so watch this swing low now. This swing low is almost guaranteed to be swept. We did tap into the fair value gap, reclaim fair value gap. Now the reason this market structure shift is not valid is didn't break it with displacement. So preferably we did see another close past it. But since we kind of tapped back into the order block and respected it here, I want to see continuation. But sometimes this kind of stuff happens. This is why you have a stop loss, right? But reversal conditions, you have your buy side up here, sell side would be down here. So I'm looking for another sweep past here. Someone pinged me in the wins and losses chat. Oh. So wait for that swing low there. There you go. So that's why I said wasn't going to trade the 1030 to 1045. We already got that nice run lower. And there's your sell side liquidity swept, but low probability kind of consolidation zone. If you look at the 2-minute, this would be fine. I think even on 2-minute, this looks like we're trying to break out of the consolidation range. But it just looks like we're still stuck in it. If anything, this would be, watch this order block now. Who knows? But yeah. So whenever you have your 10 a.m. reversal, you can expect consolidation post macro and then expansion entry out of it. If we did retrace prior to the macro, if there was a order block left over, you can see an expansion out of that or a hunt on stops. I can probably just, if you're interested, DM me and I can just take some pictures of my notes. You have to excuse my poor handwriting, but I'm sure some people, I have my entries, exit targets, things like that. So if you're interested, just DM me. I can send you some notes based on these stages of price delivery if you're interested in that. Do you have an order block in here? Now, if you measure, let me remove some of this stuff. Watching that. Your breaker technically in here. Tiny breaker. Feeling for rag. I probably will see an expansion lower. I'm looking for lower prices now. ES is quite low. You don't have any liquidity I'm seeing on the hourly past it. NQ, we do have a tiny imbalance at 14,757. And then below that, we have sell side liquidity at the 9 a.m. from last Thursday. Then a reversal point at 1 p.m. from Wednesday. Don't know if we'll get all the way down there, but I do want to see, so far, looking good, right? So far, we are closing in that gap. So I don't want to see a closure above 876. So where's 876? So this, for me, is kind of the line in the sand. We may chop around. We can, I'm not saying we'll not cross this line. It's possible we fill this gap. But closure-wise, I do want to see a closure below here. Okay. I got that level from the swing low, or the opening on last Friday, excuse me. So, let's see. probably end the stream there. We're in a consolidation, so expect, let's go to the 3 actually. Yeah, tight consolidation on the 3. So I would expect 1050 macro either to expand, probably retrace into this fair value gap. That's what I'm favoring. Maybe up into here or into the swing high. Looks like a clean high resistance market maker buy model, maybe up into the premium end of this gap. So I'm looking for this gap here, order block in there. I'll screenshot this, send it to predictions chat. I'm looking for a fill of the up to the premium end. I don't think we'll tap into it and continue. I want to see a fill all the way up to, what's the close on this or the low on this candle? 14,843, 14,840, 14,834. Oops, that's not. There you go. So yeah, done for the day. Not gonna take any more demo trades. Solid, short in there. I'll probably chop this stream recording up. It'll be posted on YouTube for sure, but I'll probably chop up the analysis and the trade that we took live and post that as a separate video. And then if you haven't already and you're interested, go watch the in-depth guide on the 950 macro. There's like, I don't know, like 20 examples of each of the possible entry models you can get. Now that's obviously, it applies to every single macro, but I think the cleanest one is this one. I think there's no doubt this is the cleanest one, especially with the 10 a.m. reversal point. I think the other ones are based off of the price action that's previously seen. So sometimes if you have a clean macro or a consolidation phase in here, 1050 and 1150 are very, very they're based on the price action previously. I think the 950 to 1010 is almost guaranteed to provide unless it's low probability. So yeah, I think that'll do it for the day. If you're interested in the notes or any backtesting data, shoot me a DM. I'll be more than happy to share it with you. I hope able to capture something. If you trade the rest of the day, use proper risk management rules. Please follow your rules. The first rule of trading is to manage capital, right? Can't do anything else unless you manage capital. So until I see you tomorrow, have a blessed rest of your day, and stay safe. Good luck, good trading, and yeah, we'll see you guys tomorrow. Peace.